Silver is up about 40% in the past year. That is not a small move. And most families who are not watching commodity markets have no idea it is happening. But here is the thing. Silver is not just an investment product. It is in your electronics, your solar panels, your car. When silver prices move this sharply, something is usually shifting in the broader economy. In the next few minutes, I'm going to break down what this means for your money, what could happen next, and what I would personally pay attention to right now. Let me start with a real situation. Maria is 44. She lives outside of Phoenix. She works in logistics and brings home about $68,000 a year. She is doing what most middle-class families do, paying bills, putting a little into her 401k, trying not to fall behind. Maria is not thinking about silver. She is thinking about groceries, her electric bill, whether her car needs tires this month. But what is happening in silver markets right now is actually connected to the pressures Maria feels every day. So let me explain this simply. Silver has two kinds of demand: industrial demand, factories, solar companies, electronics manufacturers. And investment demand, when people are nervous about inflation and the value of money, they move into silver and gold as a kind of protection. Right now, both of those forces are happening at the same time. Clean energy is pushing industrial demand higher, and investors are nervous. Inflation has not gone away as cleanly as the Fed hoped. Debt levels are high. Confidence in the dollar is shakier than the headlines usually admit. Before I go further, this is not financial advice. Everything here is purely educational. Please speak with a licensed financial professional about your own situation. There are three things I think you should pay attention to here. The first is what silver prices are actually telling us about inflation right now. When silver moves up roughly 40% in a year, that is not just a trading story. Historically, silver rallies when inflation is running higher than people are comfortable with. And right now, even though the official numbers have come down from their peak, a lot of families do not feel like things are actually cheaper. Prices are still elevated, wages are still chasing costs, silver is reflecting that gap. The practical thing here is simple. Look at your monthly budget and find where costs are still quietly creeping up. Groceries, insurance, utilities, those tend to be the areas where inflation sticks longest after the headline numbers improve. The second thing I would pay attention to is industrial demand. About half of all global silver demand right now is industrial. Solar panels, EVs, semiconductors, medical technology, silver demand from clean energy is estimated to hit record levels this year. That is a signal that manufacturing and infrastructure globally are still running, even while the average household is under real financial pressure. I think this is the part many people are underestimating. The picture is more mixed than either the bulls or the bears admit. Things are not collapsing, but they are not easy either. If you have been sitting on the fence about your saving strategy, now is a good time to check what your cash is actually earning. You can compare high-yield savings rates at bankrate.com. Keeping up with inflation on your emergency fund is a small thing, but it adds up. The third thing is what a silver surge usually signals about what comes next. Silver tends to move before some of the bigger economic shifts become obvious. It ran up before the 2008 crisis hit. It surged again during the pandemic inflation period. It is not a perfect predictor. Nothing is. But a sustained move like this reflects genuine anxiety about the direction of the dollar and about government debt. Right now, U.S. debt is sitting above $36 trillion. The interest payments alone are one of the largest line items in the federal budget. That does not mean you need to go buy silver. It means being financially flexible right now matters more than usual. Reviewing your debt, keeping your emergency fund solid, not overextending on big purchases while the picture is still unclear. Now here's how I personally look at all of this. I am not saying silver going up means the economy is about to fall apart. I do not think that is where we are. But I do think the combination of stubborn inflation, rising industrial demand, and government debt is making this harder for middle-income families than the official numbers suggest. The people who handle these periods best are not making bold investment calls. They are quietly managing their exposure, their debt, their fixed costs, their financial cushion. First, review your monthly expenses line by line this week. Look at insurance, subscriptions, and utility rates specifically. Second, if you are carrying high-interest debt, make that a priority. 15% interest or higher is punishing in this environment. Third, check what your savings account is actually earning. If it is below 4%, better options are available. Fourth, do not let economic noise push you into dramatic decisions. Selling investments in a panic rarely helps. Fifth, watch what the Federal Reserve signals over the next few months. Their rate decisions will affect your borrowing costs directly. The people who stay informed and make small adjustments early usually handle periods like this much better than the people who ignore it completely. To quickly recap, silver's 40% rise is reflecting real inflation pressure, the gap between official numbers and what families actually feel. Industrial demand is signaling the global economy is still moving, just unevenly, and the broader signal from commodity markets is that financial uncertainty is not over. Staying flexible matters right now. If this helped you understand what is happening a little more clearly, subscribe. I post new videos every week covering the economic stories that affect your money and daily life. And remember, knowledge is your greatest asset. I am also working on a breakdown of what the latest Federal Reserve signals could mean for mortgage rates over the rest of the year. I think a lot of people are misunderstanding that story right now.